I may have been streaming live this whole time. I don't know. I am using a new piece of software to try and get this stuff going. So welcome, welcome. I'm glad that you guys are here. Today we had a little bit of a snag because Daniel is unable to make it. His internet speed was just completely letting him down today. So we are last minuting, putting everything through and going in a different route. Oh, and look at that. I've even got audio coming through when I shouldn't. So I'm glad that you guys are here. This is going to be a lot of fun today. We are continuing on with the same kind of topic that we've been going on. And I've got this theme going right now, which is to help people understand that, hey, for all the same reasons that you might have decided or thought that you needed to go into wholesaling, those are the reasons why owner financing is so great. And I think that people need to really understand and have an appreciation for the fact that, hey, you have the opportunity to have it all. I know that's a very you can have it all. All you need to do is blah, blah, blah. But it's true. The owner financing thing is what so many people think rentals are. So many people think about freedom or whatever that is. So we want to make sure that we have this in front of you, that you get, hey, there's a real opportunity for you here. And you don't have to have a lot of money. You don't have to have connections. You don't have to have all of this. What you have to have is determination and readiness to get after it and to learn things and do things the right way. And so today, at a very extremely last minute, we got the pleasure of bringing on Miss Alexandra Lim, who is one of those people that I've got a massive amount of respect for, who said to herself, hey, I am going to go out and make this happen, right? I don't have to wait on anybody. This is something that I can have and that I can take. It just takes education and it takes doing things the right way. And so she signed up as a creative executive right off the bat. But I've got a huge amount of respect for her pedigree, for her resume. I mean, she lived in Hong Kong for many years doing valuations of companies for a investment banking situation of making sure if they were going to be acquiring or lending properly. And then she's worked for venture capitalists on business valuations for many years as well. I think in Korea, even at that, she's in LA now, and she's just an extremely intelligent, extremely high level girl that has a huge ceiling. She's just been a part of the creative executives for a matter of weeks at this point in time, but I think she's going to have a lot of really good perspectives for everybody. So I wanted to bring her onto the show today, and she accepted graciously at the last minute. So Alexandra, welcome to the show. I'm glad that you're here today. How you doing?
Hey everyone, thanks for having me, Grant. Doing this is just part of the job of being a creative executive. So when you sign up, you're going to be able to do a lot of fun things in addition to learning how to make more money. So I'm here to help you answer or ask all the embarrassing questions that you might not be comfortable asking as a beginner. So I'm here to do that for you. So let's get forward and learn lots today.
That's perfect. Alexandra, thank you so much for being here. And guys, please remember, comment, like, share, all that kind of stuff. We're doing a little bit of a different format today. We want to make sure that you're getting everything that you need to get out of this, because at the end of the day, you're the hero here. You're the one that we want to help move to that next section. So in these weeks previous, right, leading up to this, what I want you to do is really, if you haven't seen those, I want you to go through and watch those, because we've talked about a lot of the reasons why people go into into a wholesale situation versus going into an owner finance situation. So gosh, sorry, I'm juggling all of these relationships right now that we're trying to get things going in the back that I don't normally do. Alexandra, could you help me out, and could you tell me, when you look at people that are getting into wholesaling and you look at people that are getting into real estate investing, just name out some of the common themes that you see of what people want, what people are looking for in this situation. Why do they go into wholesaling? Why do they go into the various models that they are looking at? Tell me a little bit about what makes somebody choose to be a wholesaler.
Yeah, so if you decide to get into real estate because you want to make it big and you want to be a millionaire one day, wholesaling looks really attractive because you're able to basically risk very little of your money, but if you get a good deal, you're able to make a pretty large assignment fee. So that could be, tens and thousands of dollars based on what area you're in. And, most people, when they're looking at a wholesale deal, they'll use the common formula that you guys are probably aware of, which is the 75% ARV rule. Does that sound about right?
Yeah, absolutely. You're looking for those big assignment fees, and it's that one-time payout that's so attractive. And so what happens is everybody, gets in here. And if you had to guess, Alexandra, what's the main word that everything revolves around when somebody is saying that they're getting into real estate? Why are they getting into real estate, right? We just talked about wholesaling in general, but why? What's the word that everybody says, hey, I'm getting into real estate because I want blank? What is that?
Because I'm pretty sure I said this too when I was interviewing with you. I'm assuming it's financial freedom.
Yeah, absolutely. It's that freedom. Everybody wants freedom. And wholesaling is not freedom. That's the crazy thing about it, is that everybody sets sail for Freedom Island, and what they end up with is not freedom at all. What they end up with is a very high-paying job. It's good to have a high-paying job, but it's a high-paying job. And so what I want to talk about today is kind of that triangle of freedom, right? We've talked before, and I'm sure everybody knows where it's like, that kind of you can have quality, you can have price, you can have speed, right? Choose one, right? That's that kind of like triangle of I don't know what you would call that, quality. And here in our world, we have a similar triangle of things that everybody is looking to get out of real estate. Do you think that you would be able to name what those things are, right? What is it? And again, obviously we haven't had a chance to really prep for any of this. So you're really getting Alexandra on the spot here, guys, getting to see her really take a guess at this, take a crack at it. But what are those things, those three things that might make up the triangle for a real estate investor?
So just so I understand correctly, the three things that we're looking for financially for it to make sense for us to actually do real estate.
Right. Yeah. So it's like, if you compared, like, what are some of the benefits that you get from having a long-term portfolio? What are some of the benefits that you get from having wholesales versus, rentals, right? Like, there's going to be reasons that you choose to do one over the other, and they can kind of boil down into three. Let's start with the profit centers, right? Let's start about just the three main profit centers. What would those three main profit centers be in these deals?
Yeah, so one of the profit centers we can look at is just appreciation. So if we have appreciation on the deal, that would be something that would be enticing for investors, especially if we're in a market that's going up in value. Another one would be tax benefits, especially if we're looking at the long tail of a deal, we're looking at tax benefits there. And then we're also looking at arbitrage. If there's something that you can do creatively with a deal to, charge more than what you're paying for, that could be an excellent way to make money as well.
Right? Totally. And so when we boil down, like you mentioned, the whole idea of having appreciation involved in this, right? Well, where does appreciation benefit you? Where does appreciation actually give you money? It's from the net worth that you are gaining from having that asset under your portfolio, right? So you've got this net worth gain. You also have money up front, and you've got money in cash flow, right? If I boil down to three major profit centers, those answers that you gave were absolutely correct. And if we try to boil those into more of a just kind of a I don't want to say streamlined, but a generalized, like, every deal is going to have money up front. It's going to have tomorrow money, or it's going to have net worth that's added in there. Those are your three main profit centers: today money, tomorrow money, and your net worth. And tomorrow money is kind of net worth, but I'm kind of calling tomorrow money cash flow, right? So if we think about, for instance, wholesaling, right? Which profit centers are you going to get from being a wholesaler?
Yeah, so wholesaling would, if my understanding is correct, it would primarily be money today, like money in your pocket today, but no money tomorrow.
Right? So that's why I always refer to it as a high-paying job. It's kind of like being a real estate agent. You're not an investor if you're a real estate agent. You're a transactional person. You make a lot of money. People get to pat themselves on the back and feel like they're investors, but they're not. It's a high-paying job. If you are going to go into the rental game, okay, are you getting today money, tomorrow money, or your net worth? And what again, I've kind of defined those things out for you, and you're going to have combinations of these. But as a rental portfolio, do you get money up front? Do you get cash flow? Do you get net worth? What do you get?
Well, definitely if the value is appreciating, you're definitely increasing your net worth. If your rental's in an appreciating market, you're definitely getting cash flow in the future because a rental is supposed to provide a long, predictable flow of income. And then sometimes it can provide cash up front as well if you have some sort of deposit agreement, but it's probably not as much as wholesaling.
Well, and even to that note, like just pointing out that any deposit that comes in as a rental is not actually your money, right? Like you have to hold that back because when they leave, I just had to give somebody $1,600. They gave it to me when they moved in. I went and inspected their property last week when they moved out. Everything looked great. I had to give them that money back. So we do get cash flow, hopefully, even though most landlords I think 99% of landlords don't know what they're actually making. I don't think that people know actually how to run their financials. I'd actually be interested, Alexandra, we've got a unique opportunity here. And I'm even willing, guys, if you've got some questions here, Alexandra, this may be one of the rare chances that you get to talk to her, even if you have a little bit of an off-topic question, but you have some kind of questions about venture capital or these, valuations or something. We can entertain those today. Feel free to put those in because I'm going to kind of push something over to you there when I'm saying like most landlords have no idea what they're actually making. They think that they're making money because their mortgage payment is $450 and their rent is $1,000, but they don't know what capital expenditures are. They don't know how to account for the G&A expenses and all those kinds of things. Would you say, just kind of as a side note with your experience, would you say that a lot of business owners in general were kind of surprised by the valuations of their own companies? Like, what are the things that you might see or you might have seen when you were valuing a company or looking over somebody's financials that you might have seen patterns in where it's like, look, business owners aren't paying attention to this thing and it's affecting the valuation of their company. And I'm finding that, therefore I'm saving my investment company, my investment bankers, their money by saying no to this valuation.
I was actually thinking about this a lot as I'm beginning to talk to more sellers on the phone. One of the biggest pushbacks that I get from sellers is, oh, my house is not worth that much. My house is worth way more. And most homeowners, they don't understand how their properties are comped. And when we comp properties, this is how Grant has been teaching us, and we're talking about in the Creative Executive Group, but you really need a solid form of valuation using multiples from other houses in the neighborhood. And, people get a lot of pushback if they don't understand that your house is worth what other houses in the area are worth. And when I was doing startup valuation, a lot of the similar pushback that I would get is, oh, my startup is worth way more than this because I have IP and this and that and all of this, we're special compared to other people. But if you look at the market ultimately determines what the value of your company is. So if the market isn't pricing the company right, no matter what valuation you have in your head, it doesn't really matter because at the end of the day, it's the market. So that's kind of similarities.
Yeah, I love how you said that. That is absolutely true. And so part of the reason why I wanted to bring that up here is that I think that investors, like, I call out landlords and saying, well, landlords very often don't realize what it is that they're actually making. I think that a lot of times investors don't realize what it is they're actually doing. I think a lot of times that we run into a situation where, you might think that you are being an investor, but really you're wholesaling. That's not investing, right? You might think that you're building this future of financial freedom. You're really not building this future of financial freedom. These are two of the gimmies that we've gotten over the last couple of weeks here that I just wanted to bring back up for you guys of, these are things that I if you look at our last couple of weeks, we've got links to download these so that you can kind of review these things. They may show up a little bit small for you at this moment. But even if we just look at this left one that we did last week, right? 60 houses transacted with a kind of average wholesale deal versus 60 houses transacted with a kind of average sub-2 wrap. At the end of the day, with that wholesale deal, you're grossing like $900,000 over those 60 houses, and you're unemployed the day after you do it. Whereas if you do 60 houses with a sub-2 wrap, again, looking at all of the same positives that we got for wholesaling are all of the same reasons why you are able to do sub-2. Well, you turn around and you look at it, you got $720,000 of gross revenue up front, which is, it's $180,000 less, but you're getting $250,000 of net passive annual cash flow. You're getting a $1.5 million starting net worth. Now you're actually an investor where you're going to get income for the next 15 or 20 years. Now you actually have something to point to for all this work that you've done. So we talk about those profit centers. We talk about, hey, you've got cash now, you've got cash tomorrow, you've got net worth, all these kinds of things. We talk about, hey, you may actually be misvaluing your own business model. Because I think Alexandra hit the nail on the head a second ago of talking about how commonly sellers misvaluate, because I'm going to create a word, their, what their house is worth. It's one of those things. There's something called the something effect. There's an actual psychological term for this, and I can't remember what it is. But what it is, it's like the gunner. It doesn't matter. So let me ask you this. You who are watching, and I want your comments, guys. We want to interact with you. So if you've got comments, drop them in there. Jess, I see you talking about the real estate has made your life immensely better. I'm so glad to see that. But continue to comment in here and let us know. But I want to see what if you guys have run into this. So have you ever looked through like a news article or a newspaper, if you actually got newspapers, and you look through this website of news and everything is like, holy crap, I can't realize that this is how things are. Like, that's crazy. I didn't realize that this is how it is. I didn't realize this and that. And then you turn the page or you click on a link that goes to something that you know intimately very well. Like, the ins and outs of it so well. What happens when you read that article? Alexandra, I don't know if you'll be able, if you've experienced this before, but what happens when you read that article? How do you feel about the reporting that happens on this topic that you know extremely well? How do you feel about the accuracy of what they are saying on that topic, usually?
So usually, are we talking about the news that we see pop up on our Facebook newsfeed, or like newspaper?
Yeah, just anything, right? Like you're looking at a news site, you're clicking through links, you're looking at, and it's like, man, that's crazy. And then you click on a link, and it has something to do with something you know intimately, whatever that is. So if that is valuing companies or yoga, right? It's something that you know intimately, and you're reading through this article, and they say, well, an evaluation of a company, this, that, and the other. Do they always get that right, or is it oftentimes they're kind of reporting something that when you get to something that you truly know the ins and outs of, you're like, oh, wait a minute, hold on, that's not really what it is?
Yeah, I mean, you're going to get a lot of clickbait, right? Because they want you to open up that article or read that newspaper. So when you're reading articles most of the time, sometimes you have to be a little skeptical about the accuracy, right?
Right. And so what happens is we read through these things, and maybe you haven't experienced that. I'd like to know, comment if you've experienced that. If you've read, an article about something that you know intimately, I'd actually kind of like to know what that is, because I want to know what you guys are best at. That would be interesting for me. But if you read an article about something that you know intimately and you're like, oh, wait a minute, like that's actually not what it is. It's like I might read an article about the real estate housing, right? And they're like, oh, well, the housing market is going to crash and there's no way to make money in real estate anymore. And so therefore there's going to be sweeping changes in the government and blah, 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 blah. And I'm sitting there and I'm like, well, actually, no, there is totally a way to make money in this market. It's just not the one that everybody knows. And then I click on another link or I flip the page or whatever and immediately forget that just a second ago, I read an article about something that I really knew very well and realized, oh, wait a minute, this author didn't really know that topic that well. And then I just flip the page and I'm like, this author knows everything about that topic. I'm going to take that for the absolute truth of what's actually going on, right? And we forget, hey, these guys are just writing articles about stuff, right? They're trying to figure it out all on their own. The reason I bring that all up is I want to really point that out to you guys as you learn from folks that are out there, as you're looking at the info marketers, as you're looking at the people who are pointing to their fancy new cars and all that, the Ferrari that they just rented or whatever that might be, their leased Lamborghini, and they're acting like that's where it's all at. That's not to say that a lot of people don't actually have the 550s or whatever, but there's a challenge in taking people's word and not really realizing that maybe they just don't fully understand everything yet, right? One of the big sellouts on the owner financing world that you can really look at is that if you're learning from somebody or you're reading something from somebody that is talking about, hey, you should just self-service your notes, it'll save you the money, blah, 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 blah. There's two options there. Either A, they have not done enough deals to really know what it takes to self-service, or B, they're just terrible educators and they don't understand what it takes to actually, for somebody who's trying to get into that space. Just as a quick aside, I always say on the self-servicing side, unless you can afford to have a bookkeeper in-house who only does your servicing at $50,000 to $70,000 a year salary, you can't afford to self-service. It is very difficult to do that kind of stuff, right? So be very careful of who you're listening to when you've decided to get into these certain areas, because you're listening to a lot of people who may have taken a shortcut. You're listening to a lot of people who thought, hey, I want to be a real estate investor. Wholesaling allows me to make a lot of money right now. And they've convinced themselves that they're a real estate investor because they're wholesaling. And even at that, you see all these posts on, Facebook and whatever about like, oh, I'm door knocking today. Oh, I'm making calls. Look at me on the phone. But you don't see the posts about, hey, I'm at the title company. I'm closing on a deal, right? Be very careful about who you're listening to. I say that because if you're somebody who has looked at real estate investing and you say, I want financial freedom, right? As we talked about earlier, I want freedom. I want to be free from this. And you've started to go into this road of wholesaling. I want you to watch this wholesaling versus owner financing series on these last couple of weeks. And then I want you to consider this. That triangle that I kind of talked about earlier of what are the three things? It's high return, low capital, and low risk, right? We got 3 profit centers. We also have 3 major benefits of investing. So we got the 3 profit centers. Can you parrot those for me again, Alexander? What are our 3 profit centers?
3 profit centers are money today, money tomorrow, and increasing your net worth.
Yeah, totally. And what are we defining as tomorrow money?
Tomorrow money is money that you don't get today.
Cop out answer. Cash flow, right? Like that's kind of what I'm renaming as cash flow, is we've got cash flow coming in. So we got these 3 things that we need to pay attention to. Now, we've established that rentals only give you a couple of those. You get cash flow, hopefully, and you get net worth. Now, again, that whole diatribe about the not understanding what's really going on and misvaluing yourself and all those kinds of things points to a lot of where landlords are, and it points to a lot of where wholesalers are. Wholesalers are only getting one of those profit centers with money today. Flippers, that's today money that you get tomorrow, right? It takes a long time to get there, but it's a one-time payout and you're done. Whereas with owner financing, you're getting a down payment, which is real money. It's not like a deposit for a rental where you've got to give it back to them eventually. You're getting that down payment 10%, which is awesome. You're getting cash flow, which is an actual true net number, which is awesome. And you're getting net worth building. Remember when I showed you that, hey, 60 transactions over here and 60 transactions over here? It's a significant difference in what that's done for your life and freedom when you're unemployed the day after. And sure, you made almost $1 million. That's before G&A and before salaries and commissions and all that kind of stuff. You're making a little bit less upfront over here, but you've actually got a net worth. You've actually got some cash flow. You can take off for 6 months if you want to. Well, now let's look at these benefit triangles, right? One of the things that we want is we want high returns. Obviously, we want the best returns we can get. We don't want to have to put in a lot of money. That's where our low capital comes from. We don't want to have to take a lot of risk, obviously, right? That's low risk. And so we kind of get into these situations where we tell ourselves, okay, well, if I want a high return and low capital, it's not going to be low risk. It's going to be high risk. If I want a high return and low risk, it's not going to be low capital. It's going to take me a lot of money. If I want a high return and, or if I want low risk and low capital, I'm just not going to get a lot of money back. That's like an example of like a CD or a bond, right? Like if you're buying a CD or a bond. Alexander, do you know what the bond rates are at, or CDs or anything are at right now?
I don't have the exact number off the top of my head, but you're probably going to get a much higher rate if you start investing in real estate over bonds right now.
Right? Totally. And so that's why I really want to point you guys to, you like that? Ika, our wonderful, fantastic assistant that helps me out. Her daughter drew my face for us on this. But you can't have everything, right? Like when we invest in real estate with owner financing, I talk about this a lot. You don't have that huge risk, right? Because we're investing everything through an LLC. We're not signing on anything personally. Worst case scenario is ideally that we are just losing our future income if you do things right. If you are learning from the right person who actually has experience and is actually trying to help you along the road, you shouldn't have personal risk on there. Well, low capital. I talk about this too much, but I legitimately, literally, it was me who quit my job and I had $4,100. The check is over there that I quit my job on. And my wife was working, and that meant that we had enough to live for 6 months before I had to get a job. It was a 6-month do or die kind of thing. So you hear this a lot about owner financing or different strategies where they're like, you can quit, you can do this with no money. And then you find out once you get to know them a little bit better, oh, except your dad funded all of your deals. Got it. You know what I mean? It's sure, in theory, you can do this without no money. Yeah, they did it without no money. I did it without money, right? I had $4,000, no capital. That was it. I had $4,000 to start my business, and I was a millionaire within 5 years. And I do not come from money. I did not have a silver spoon. I did not have family that was in real estate. Had to go figure it out. And I did it through owner financing. So we've got our low risk with our LLCs, with the way that we contract, with the way that we go about our business. We've got our low capital because look, if you're sub-2ing a deal, you may not have to come up with any money at all, right? And so Alexandra, as our brilliant and wonderful valuations expert, this is going to be a really hard answer to have. But what is your return on capital if you spend $0 and from that you get a $25,000 raise to your net worth and $350 a month for the next 20, 30 years? What kind of return is that? Is that low, medium, or high? What percentage would you put to that?
Well, even if you had a lower cash flow than that, the fact that you put zero money down, that's already a pretty amazing return that you're probably not going to find anywhere else in the market.
Right? And so people are looking at wholesaling because they're like, look, I got no money to put into it. So I've got to wholesale because I can't take this thing down for my portfolio. So that means that if I want low risk because I'm just getting started and I don't want things to come back on me and kill me and get sued and all that kind of stuff, which is one of the big reasons why people go into wholesaling. I don't know everything. I need to kind of get in. I'm going to fund things through flipping things out with a wholesale deal. And then I'll go into real investing, right? That's a low risk. That's also low capital because you're saying I don't have the money to get in there and that kind of stuff. And you are getting a higher return. If you truly didn't put money into that wholesale deal, okay, you got $5,000, $10,000, $15,000 from that deal. You got all free. That's nice. But you can also get all free through owner financing, just like I did. Watch last week's episode when I talk about like the whole timing issue of both real estate models. And I want to be super clear, right? Like I like wholesaling. I really do. And Alexandra can vouch for this. Like our executives get that a flow chart that outlines exactly what to do with, the different types of leads that we are running into. And right now, the thing that I want everybody paying attention to is either wholesale the deal or owner finance the deal. I think those are the two buckets that I want you to focus on at first. You should get cash. Cash is important. You can't buy groceries with net worth. But once you know that cash exists, you can switch over into these sub-2 things. And that's where we go into the freebie that you got from last week. Again, you can click on the related videos or look at last week, Grant, teach me something. But look at this. Wholesale and sub-2 work exactly the same way. Step 1, you contract the deal. Step 2, you market for the buyer. Step 3, you see how that marketing's going. Step 4, you adjust. And then you either cancel the contract or amend it, or you close with your buyer and make money. Now, on one of these strategies, after 60 of those deals, you're a millionaire. You've got that $1.5 million starting net worth. You've got passive, true, actual net income coming into you every month. On the other one, you got to do it again and again and again and again. And I talk about this, as well of like, 2017, I didn't go to the office for 6 months. Now that was I was dealing with some mental depression and issues like that of things that I think that people don't talk enough about. Of mental health is very important. And we'll talk about mental health again. If you are struggling with mental health, don't feel bad. There's such thing as entrepreneurial depression. You are going to deal with mental health, depression, hardships as you get into being an entrepreneur. Don't feel bad about that. That's part of the deal, right? It's how you respond to that matters. But I took 6 months and I still made money, right? Last year, when I saw kind of how shifts were going and I was recognizing what we were going to need to do, and I was recognizing that my current staff was not the way to go with that, I had to think very seriously and pray about it and talk about it with my wife and those kinds of things. I almost retired last year because I hit my number, right? I've got my net worth. I had my cash flow. I was just going to sell some notes, pay off all of our debts, pay off the house, pay off the cars, live on the cash flow and be done. And that's 6 or 7 years into my career. Because I started out with sub-2 reps and because I took that road and had the net worth and had the piggy bank. And that's what I want you guys to understand too. Sure, you get all 3 of those items with wholesaling, but you have to do it again. And when you've done the owner financing side, you don't have to do it again. You get to choose to do it again. One of the things I do in the initial interview with all of our executives, we have this interview where we talk about, it's a 3-hour meeting, and we talk about what are your resources, where do you want to go, when do you want to retire, that kind of stuff. And my question about retirement is always, look, what's the number that you need to be making passively every month to allow yourself to retire? Not saying you will, but let's get you to that number to where the first week that you no longer enjoy this job, you can just hang it up and just make the money that you want to make for the rest of your life, right? Like that's the number that we need to be looking for. And you don't get that. Sure, you can systemize a lot of things with wholesaling, and I've seen some people do it, but that wholesaling stuff disappears when you are in a situation where the market shifts and maybe you don't have that portfolio to back it up, right? That goes away. And so we want you to do both. We want you to know that wholesaling is great. Get that money, get the cash in. But don't neglect the true investment forms of something like owner financing, because you can do it. It is available to you, person with no money, person with no resources, or whatever that might be. Alexandra, I see you kind of pop your hand up there. What, you got something to say on that?
Oh, yeah, no, I mean, everything you mentioned, that strikes such a huge chord with me, because this is ultimately why I got into this group too, because, you know, you want to take informed action, and what Grant's teaching is basically how to actually create real retirement income for yourself. This is something that a lot of people aren't teaching. And, you know, we have some questions in the comments here, like from Ken. So, you know, if we wanted to do a seller finance deal, how exactly would you pitch seller finance to a seller?
Yeah, that's a great question. And I think, so one of the things, if you go to, we've got a freebie link for you. Ika, if you would go ahead and comment that in there, and it's also going to be in the description of the videos there, where you can go get the download of what we're working with today. And one of the things that is there, it's just a lead or a ClickFunnels site, right? So when you go to the X button, it'll pop up and be like, hey, do you want our negotiation quick tips? Sign up for that. Because I think I've got like 50 or 55 like little quick 1-2 minute videos that give you legitimate negotiation points to get into owner finance houses, but also to negotiate a good deal. I think the quickest and easiest thing for you guys to start working into your pitch, especially those of you who did get into wholesaling, because how many of you here started this business and thought that wholesaling was your option? I'd like to know how many of you watching, that's the route that you thought you were going to have to go. Let me know. But the easiest thing for you to incorporate there is that when you're making your offer and somebody's saying like, well, what can you offer me? You can say something, whatever you would have normally said. We typically like to work in ranges. So I say I'm in the low 50s, mid 50s, high 50s, right? See what the reaction is. That lets you know kind of what range you need to be on, that kind of thing. But then follow it up immediately in saying, but I'm able to actually pay you a lot more if you're willing to take your equity in installments, right? It's a little bit of intrigue there. It gets them thinking about it. They're like, well, hold on. You can, I'll accept mid 50s, but what's in the box? What's in the box, as Brad Pitt would say, right? So let's take a minute on that side of things too. Alexandra, what do you kind of dissect? Because Alexandra also has a great sales background. She's done marketing and that kind of stuff for different firms as a consultant for advertising and that kind of stuff. You know, what are some of the things from a psychological standpoint that stick out to you when I do say something like that? Like, hey, you know, for a house in that neighborhood, I'm usually coming in with cash offers in the mid 50s. But I can give you a lot more if you're willing to take your equity in installments. What sticks out to you about that?
Yeah, and you know, this is actually 2 situations I was dealing with last week. Basically, what kind of went down is we were talking to a seller, and then we gave them the cash price. And you know, most sellers, when they see the cash price, they'll kind of balk at it and be like, oh, well, that's way too low. But the beautiful thing about a cash price is that it kind of anchors that person to that low price. And then afterwards, when you say, but hey, I actually have another option I can give you, which is to take your equity in installments, and I can actually offer you more for your house. That way, it gives you a lot more flexibility that other real estate investors don't have. So it's just a really amazing tool to have in your toolkit.
Yeah, I agree. And I love that anchoring aspect of it. And the other thing that I like about it is the mystique, right? Mystique is a big not initiator. What's the word I'm looking for? Like motivator, right? Like there's this Family Guy skit. I don't really watch Family Guy, but I used to. And, you know, there's this thing where it's like, they're in some office for some reason. And the guy is like, I could give you this boat that's outside, or you can have what's inside of the box. And Peter's wife is like, go with the boat. And he's like, but baby, If we go with the boat, it's just a boat, but like anything could be inside of the box. It could even be a boat. You know what I mean? So having that little mystique is a big addition for this. Go ahead, sorry, Alexandra.
Oh no, yeah, and I just wanted to point out a really good question that Hunter has. When you're pitching owner financing to your seller and you're being honest with them about what exactly you're going to do on the disposition side of the house, what keeps seller from saying, "Oh, you're just a middleman. I'll just do what you're doing and get straight to my end buyer like you're doing"?
No, I love that question too. It's one of those things where I've run into that, and I get past it every single time, and so I just tell them, I'm like, yeah, nothing keeps you. If you want to go do that, that's totally fine. Let me just ask you a couple of questions, though. I mean, if you want to do that, do you know how long? And so like in Texas, there's different timelines than the nation. I'm going to use a national timeline, right? But I would say, do you know how long it needs to wait between the time that somebody gets their truth in lending disclosures and when you're allowed to close on this deal? They're not going to know that, right? In Texas, you can say, okay, well, you've got a loan on this property, right? You're familiar with the underlying lien disclosures that need to be given out on that? They're not going to know that. Do you know how long it's going to take from the time you give an underlying lien disclosure to the time that you're allowed to close on a property? They're not going to know that either. So then I'll follow it up, again, truthfully, with, look, at the end of the day, the law does carve out for people to do a couple of deals a year, right? Like you could go do that. But just because you know that a thing exists does not mean that you're going to be able to do that successfully and to handle the buyer long term on that. Do you know what loan servicing is? Do you know what trust accounting is? Do you know what escrow analysis are? How to run an escrow analysis for somebody? Like how would you run an escrow analysis for your borrower every year? What day would you run that on, and how would you adjust their payments? Right? Like part of being a good negotiator, I think, is being a social chameleon, understanding how to communicate to somebody in the language that they are speaking, right? We've talked about this in our sales pitches or with our sales pieces before. And so like Ken says, how exactly do you pitch a seller finance to a seller? Hunter saying, in effect, how are you negotiating your way into this? Dude, negotiating is like my favorite part about this business. I love negotiating. I think that it is a phenomenal way. And we talk about negotiating a lot in the academy and as members and as an executive or as a seller financing essential member. I mean, we talk about negotiating. I have a negotiations masterclass that is exclusive to members of Creative Cash Flow. I've got those negotiations quick tips because that to me is the most important part about the entire business. If you know how to negotiate, that means you'll know how to market. That means you'll know how to get deals done. I've even started training my son, who just turned 3 yesterday. A couple of months ago, I started telling him stuff of like, hey, if you want to get something from me, if you want to get something from somebody, like, what do you think daddy wants you to say? What do you think daddy is hearing from you? What do you think mommy needs you to say to get that done? And I even literally told him, like, look, if you know how to sell, using these words, if you know how to sell, if you know how to convince people of the things that you want, it doesn't matter what you're good at. You will be successful in your life. And I think that that's very true. If you know how to negotiate, you can get anything. And I talk on negotiations a lot. And so this is a big piece of that, right? So the funny thing is hate is a strong word, but like I'm a douchebag and I understand that, right? Like I get that I'm a douchebag and that I have to I have to ask forgiveness with new personal relationships and just be like, look, I just want to be super clear with you. Like I'm a douchebag. I know it. I just can't help myself. So just deal with me if I'm a douche to you, as far as just being cocky and confident and all that kind of stuff. But my favorite negotiation language is when somebody tries to flex on me. Because that's the one, that's my native language. Like, oh, good, you want to flex? Let's flex. Let's play this game real quick, right? Like, oh, you're just going to do this without me? That's cool. Tell me, what does TILA stand for? You know what I mean? Like, just completely outflex them on these things. And so I love when somebody tries to come at me with a flex because we can just hit them really hard with that one. So those things that I just told you, those are very much how you would approach that. If somebody's like, look, I'm just going to go do this on my own, you can be like, okay, that's cool. Like, I will give you some hints on what to do with this. And legally, yeah, things are carved out for this. But I will tell you, just because you know how something, okay, so I know that an engine takes gasoline and combustion, and there's an ignition that happens within the engine, and that's what makes my vehicle go. So why should I pay Chevy to get a car? Right? Like, yeah, there's a lot more to this than just what you see. I've studied this for years. and I'm still learning stuff. So if you want to go do that on your own, have fun. Go do that on your own. And I love the whole, like, when people try to, again, flex on me and be like, well, I'll just go do that. I'm like, all right, see you. Bye. I don't need you. I got a bunch of other appointments. I'm going to buy those houses instead of yours. Do you want my money? Because if so, let's talk. Right? So that's kind of how I handle those things. Alexander, do you have any input on that sort of track here? And we're a little bit off topic here, and that's okay, right? We're willy-nilly today. We're last minute and we're pushing things in, but so we're a little bit off topic from the wholesaling and sub 2 stuff, but I think that these are still valuable questions. What kind of input might you have or observations about something that we've talked about there?
Yeah, so if you're here watching this video, there should be 2 takeaways. Number one, there's more options than just wholesaling. If you really want to make it big in real estate, creative financing is definitely an option you need to consider. And number 2, don't ever flex on Grant because he will destroy you. So that should be the second biggest takeaway should be taking away from this video. But we also got a really good question from Matt Smith, just talking about creative financing. He's asking, do you ever just keep your sub 2s as rentals as rather than just wrapping? And that goes back to not just thinking about wholesaling, but also other strategies that we can use beyond just wholesaling.
Yeah, absolutely. And so this is where I start to get into, I try to, and I've talked about this on a few streams here and there. I talk about it a little bit more with my students. But one of the things that's interesting about the position that I'm in is like, I don't think that it's a big secret. I've mentioned it before. Like, I don't need the money from this. I don't need to be an educator. I love educating. I love being on camera and helping people get to that next level. And so I get to enjoy that. And one of the funny things about it, and I talk about this internally a lot, maybe I haven't said this so much on video like this, but it's funny because when we get into the info space, what I kind of classify, and Alexander will probably back up, it's a very different class when you're in the executives group than it is on these. And kind of philosophically, one of the things that I've put behind that is, when you're watching Grant teach me something, I have to wrap up what I know you need inside of what I know you want, right? That's why we've got an episode on wholesaling, because people Google wholesaling and they think that wholesaling is the end all be all. And I need you to understand, hey, there's more to this investment deal than just being a wholesaler, right? I want to wrap up in, what you need inside of what you want. And ironically, the more money you pay me, the less of what you want I give you. And the more of what I know that you need comes out, right? Now, the reason why I bring it up like that is that there are a million trillion ways to do real estate. And what I have found is that my most successful students are the ones who are willing to allow themselves to simplify the game. And what I mean by that is, so, as an example, all right, I gave this flow chart out to all of our executives that are in the course. And this is literally, like, straight up, this is, if it will load for me, this is what we do. These are all the questions you have to ask. This is the entire flow of doing business. And you'll notice that when we do, so this is all our acquisition process, right? What happens when you get the contract, and it all flows down to my ops manager, who is then going to underwrite the deal and give us an idea of how we want to exit that deal. And you'll notice that even us, we use this. We've got a wholesale exit and we've got an owner financed exit. I do have hold as rental, but guess what? It's pretty much blank. The only reason that I have hold as rental in there is that, and this isn't done yet, there's, I guess I didn't label, placeholder, right? The only reason I have this in there is that we're going to take over properties that have tenants in them, and, you got to deal with that, right? But it kind of goes down to this whole idea of the jack of all trades is the master of none. Sure, you can do a lot of different things. And this is why I emphasize so heavily that subject to is an acquisition model and that wraparounds are a disposition model. Have you heard me talk about that, where I just really hammer that home? If you've watched the Academy videos, go to propelio.com/academy. If you are a Creative Cash Flow member and you watch the Academy in there, you see me really hammer that home in our lessons that have to do with owner financing. Of sub 2 is a way to acquire a house and wraparound is a way to dispose of a house. The reason why I'm so specific on that is because if you sub 2, You can wholesale, you can flip, you can rent, you can do anything you want, right? The world is your oyster. It is an acquisition model. It's just that I want to try to help you guys simplify the game, because what happens is you'll spend 6 months figuring out how a wraparound works. And then you're like, okay, you're just now ready to actually do some wraps. And you're like, oh, but I could also rent it. So then you rent. Well, you haven't spent. So now you got to figure out 6-9 more months of how to rent well. And then you're like, oh, well, this one's just as hard as wrapping was. So now do I do wrapping, which I spent 6 months on, or this one, which I spent 6 months on? And then you waste 3 months deciding what strategy you want to be good at, and you never truly make your money. Whereas if you just kind of boil down into these two very simple options, right? I want you to either wholesale it or owner finance it for now. That is going to be where I want you to be, because, and again, I'm giving you what I feel like people need in the stage of their career that they are typically at. Because A, once you've done enough of those deals and renting truly does become a viable option for you, which I think is not viable for most people who have begun. I think by the time renting is, because here, Alexander, can you tell me, I'm going to put you on the spot here. What is the thing that I say about rentals? When is a rental good? Can you parrot my philosophy on that? When is it good to have rentals? There's one situation.
When you're looking for, is it like the tax benefits?
Sort of. That's one of the benefits too. Like that is one of the benefits from it. That's definitely a reason why you want rentals. But the only situation that I think you should be looking at rentals is if you can afford to not make a single dime off of that asset until it's entirely paid off. Because the thing is, you may make money before it's paid off, and that would be great. But the greater chances are, from just historically speaking, seeing other people that have done the business, it's not as likely. And as I talked about earlier in the show, like people just don't typically understand that they're really not actually making money on it. You think you're making money on deals that you're not. I know a guy here in town who I've got a lot of respect for, one of the best negotiators I've ever met. This dude had somebody cash out their 401k and come to closing with $50,000 so that he could buy the house at the price he wanted. He's good. And, you know, he went into the rental game. He used to be a buyer for me for a very short period of time. He acquired for us, and you know, he went into the rental game. He built those up. He's very financially savvy. He's got a lot of money in the bank account. And then slowly over time, he started realizing as he was running all of his financials, he's got something like 30. And he started running all his financials. He's like, wait a minute, this actually sucks. And he's been owner financing everything out. The only people that truly love rentals that I have found historically are people who fit that model, who do not need a single dime from that rental unless it's paid off, because that is when it is good. And that's not the situation that most people are in here. Now, might you buy a rental or two a year, which is a philosophy I held for a long time as well, just for the tax benefits, because you can depreciate and get your rates down. I don't know. Talk to your CPA. It may not matter to you. It may not be a big situation. It may not be a big deal for you. But my idea and philosophy behind this is that when you have a rental, it takes time. There's nothing passive about having rentals, right? I don't think rentals are bad. I just don't think they're what everybody thinks they are. There's nothing passive about it. Even if you've got a manager, you're managing the manager and you've got vacancies and you've got repairs and all this kind of stuff. The time spent dealing with that rental, especially if the primary model of your company is something else, the time spent dealing with that rental property could have been spent acquiring 3, 4, 6, 10 more owner financed assets that you don't have to have your hands on with, right? And so the argument is, yeah, but I'm getting all this appreciation and tax depreciation and blah, 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 blah. But that time, if you had taken it from the management of your manager or whatever it is and put it into acquiring more assets in a truly passive format, theoretically, in my opinion, editorially, I think can make you a lot more money than dealing with that appreciation, because you still get appreciation over here. Why do you get appreciation? Can you answer that one, Alexandra? What is the appreciation that you get through owner financing? How does your net worth raise over time when you've owner financed a property out?
Is it from, well, I'm assuming that it's from the exercise price that sellers, when they buy the house at the end, right? Like if the house had appreciated, then that's the price that you're going to get paid off at?
Not necessarily, right? Because you get paid off at whatever they still owe you, right? So they owe you a mortgage. It doesn't matter what the property's worth. They're going to pay you off what the mortgage is valued at, right? But the difference is, and you used this word earlier, arbitrage. If you have sub-2'd a deal at 3.5% and you've owner financed at 9.5%, well, over time, you're paying your debt off way faster than they're paying their mortgage to you. So you still get appreciation in net worth. It's just through arbitrage rather than this vague and undefined what's the market going to do. Now you're like, well, in 4 years, I will have paid off this much and they will have paid off that much and my net worth will have grown that much, right? There's this certainty behind it. So that's one of the things that I go for. So the short answer, the answer to the question you actually asked is, yeah, totally, man. Acquire sub-2, do anything you want with it. I'm living in a house that I bought sub-2. I have wholetailed. I have flipped. I have done everything with sub-2s, okay? But especially at the beginning, I really want you guys to boil this down because if you've got two options for you, you can either wholesale a deal or owner finance the deal. That means that if you contract it at a wholesalable price, you can put some cash in your pocket and call it a day. And if it's a little bit higher, you can go ahead and owner finance that property out and put some cash in your pocket and call it a day and focus on the next one. Now, there may be situations, like we've got like South Dallas over here, down in like Cedar Hill area, Duncanville. There's not a lot of people with the 10% down, but it's a phenomenal rental market. So maybe you decide to rent over there, right? But just be wise about it. And don't spend too much time. You have to really analyze your deals on these things to make sure that they are going well. So I do want to pull back in. Let's finish up and talk about the owner financing versus the wholesale aspect, because at the end of the day, if you really truly understand wholesaling and you really truly understand owner financing, then you are going to make a lot of money. One of the things that we used to talk about in martial arts, which I know every time I talk about like a fighting or martial arts analogy, it's the worst analogy in the world because like nobody is like, you're supposed to use analogies that like matter to people. I know this doesn't matter to you, but there is, the guy that I learned from, I loved this mentality. We'd call it a martial science and not a martial art, right? Like there's a very like defined way to do specific things. And I would, and I think that might be attributed even to Bruce Lee, that phrase. It's not, he didn't create that, but one of the things is like we used to work on a kick and a block for like anybody who came into that school got really good at down blocks and got really good at kicking forward, right? Because if you know how to down block like perfectly and you know how to kick perfectly and punch, right? That was like one punch, right? I would rather face the guy who's practiced one punch 10,000 times a day. I'm sorry, I would rather face the guy who's practiced an entire, like, I want to know how to punch, I want to know how to kick, I want to know the full thing, and they're 6 months into their progress, right? I would rather face that guy in a fight than the guy who came in and perfected the timing on, when I see this thing, I'm going to throw this punch. When I see this thing, I'm going to throw this punch. And they did that 10,000 times a day for 6 months. That guy's the guy that knocks you out because he's perfected that move, right? And so that's the thing I want you guys to do is when you get into this, you should have a really good understanding of what you're good at. And I want to get you guys there faster than if you were just out and about, because you start chasing shiny things and you get distracted. Now, let's wrap up what you need inside of something else that you want. Here's what you want. You want to know, hey, I almost like fit into this face here. Wait, I'm going the wrong way. You want to know all these different strategies. And if you are going to get into different strategies, I should like shade my head out. If you're going to get into these different strategies, this is one way that I like to look at them. Is you have a situation where if you want to buy in different strategies, these are the strategies I want you to know. Okay. If you are unwilling to listen to me and say, well, Grant said that wholesaling and owner financing is really all I need to know. I really want more. I want you to only go this far. I want you to also put flipping in, and I want you to put, I say I want you. I'm going to use a really stupid word here because it's not up to me. I'm going to say allow. I'm going to allow you to put holding in there for rentals. But I do want to put that in there as just a, hey, this is where it would fit. Owner financing and short sale. And the reason why, and I put LTV here, I should really put like percentage of basis, but LTV is loan to value here. But this lets you know, hey, if you contract a deal for cash and you get it for under 75 cents, that's a flippable deal, right? You can throw that on the MLS and make some money off of it. If you are up to like that 80% deal, you could probably wholesale that deal out. There's a lot of people that buy wholesale at 82%. Those people are going to be people who are looking to hold. And when I say hold here, I'm really kind of referring to that rental. 75 to 82% your contract. And Alexandra, can you tell me? And by the way, I gave Alexandra the intro. I did not necessarily go into, Alexandra has not like she just decided to get into real estate. She's got a phenomenal business background. She's an incredibly intelligent girl. She's like a month and a half or 2 months into her investing side of career. So again, as she said earlier, like she's going to help say some of the questions that some of you may be thinking, because she's got to learn those too. But if I do say percentage here, Alexandra, what am I saying the percentage of? What does that mean? If I say you're buying at 80 cents or 80%, what is that a percentage of?
That's the percentage of the ARV, which stands for after repaired value.
Perfect. Yay. So that is your percentage of ARV. So again, when we look at these things, if you're contracting at these percentages, that's where you can go. Now, you can owner finance exit up to 105% of the value of that property. I've done it. I made 6 figures on deals where I've owner financed at 105. And then if you're in a deal for over 105, that's when you want to look at doing a short sale and reach out to somebody like Oyez, who may or may not be in your MSA, but they can point you in the right direction. But part of the thing that I wanted you guys to get here is if you are going to go this road, this is what the result will be from it. If you do a flip, that's today money that you get tomorrow, right? You're going to have to wait a while to get that money in, but it's a one-time payday and you're done. If you're wholesaling, it's today money. You get one-time payday and you're done. Holding rentals is really only tomorrow money, because tomorrow money I defined earlier as the cash flow, and then we kind of separated out net worth to be helpful for that. But tomorrow money is both cash flow and net worth, as Alexandra pointed out earlier, right? So holding with a rental, you don't get money up front. You only get cash flow and net worth. The beauty on owner financing is you get today money and tomorrow money, right? You get the cash up front, the cash flow, and the net worth. That's why I like being here. And then short sales are kind of a special beast that have to be at overvalue in order to do a short sale, and that is only today money. And last thing I want to leave you with here is that when you are contracting with these kinds of numbers, you can go one way on the chart, but you can't go the other way on the chart. So Alexandra, if you contract a deal at 60 cents on the dollar, what are your options on that deal? Wholesale or retail, wholesale, hold, owner finance. And we're going to throw out short sale because it has to be overvalue for short sale to work. But if you contract at 60 cents on the dollar, which of these strategies can you use?
Yeah, so I can't see the chart right now, but it just sounds like if you can get a really sweet deal at 60%, you have so many options. You can basically hit every single one of those strategies from there on up.
You're right. Yeah, so if you are in a situation where you have, and I just shared the screen with you, Alexandra, so I don't know if that's coming through. Again, we're getting things set up for it. But if you contract at 60 cents, sure, you can retail it. You can wholesale it. You can hold it. You can owner finance it. But if you contract something at 90 cents on the dollar, what are your options at that point in time?
So just based on this chart, if we're cutting out short sale, it looks like your only option would be owner financing if you don't want to lose any money.
I like that caveat, right? Come with me if you don't want to lose money. Yeah, that's absolutely right. You can go one way on the chart. You can't go the other way on the chart. Again, this is a freebie download for you guys. So click on the link in the description. Click on the link in the comments if you want to download this and post this up later with my big ugly mug on your computer. I'd love to be staring at you all day as you get your work done. But these are really good ways to think about the strategies that you have available to you. So that does kind of go back to Matt's question about, hey, can you rent it? Can you, what can you do if you're going to be going for that? One question I do want to bring up real quick, and Alexandra, you may have been about to pull this one out, but Matt says, but don't most people refinance out of your high interest in 5 years or so? That is a beautiful question. If you intuitively, because we haven't talked about this very much, I think, Alexandra, intuitively, what would be your, I'm going to give you a hint. The hint is the answer is no. So what would be your intuition as far as why would I say that the answer is no on this?
But most people don't refinance out of your high interest. Well, is it because they don't have the built up credit to actually go to a bank and then refinance out of that interest rate?
That's a big reason, right? So one of the things that we need to, and that's a big reason, like nail on the head kind of big reason, right? You got it right. One of the things that we really need to understand, and I think that this will help everybody's conversion rate that's watching, whether you're a wholesaler or an owner financer, whether you're listening to me about all this and like, yeah, but wholesaling, I make 20 grand and I'm okay with working. Okay, well, if you want to work for the rest of your life, that's cool. That's not freedom. So don't tell me I'm okay with working and then also tell me you're in real estate for freedom, because you're not. But that's okay. It's your own business. I'm merely a consultant, right? But to be a great negotiator, to be a great buyer of properties and seller of properties, you have to understand perspectives on life that you don't agree with and know how to communicate with them. Would you agree with that? When you're looking at negotiating with somebody, when you're looking at a sales situation, you have to understand how people think in ways that you don't agree with. But you have to know what they think about life and how they go through life and what their world looks like. Would you agree with that, Alexandra?
Yeah, I totally agree with that. Yeah, I guess like you said, it depends on what your goals are in life. But if financial freedom is your ultimate goal, then that would make sense.
Well, and anytime you're in a sales situation, that's how you get to yes. So one of the things that I can throw out there for you guys, if you are a member at Creative Cashflow, or even Ike, if you have these links, my SoundCloud, I've got 2 different calls that I like. Whenever we start talking about this kind of stuff, I like to show people. And it's funny because it's not like I sifted through a million calls and was like, ooh, these are going to be 2 examples. Literally, this is back before all of our calls were necessarily recorded. Literally, I was like, you know what? I need to record a call for my students. The next call, I bought a house, right? And then I realized, I need to start probably recording my calls again, because that was a heart buyer. And maybe the next call was with a head buyer, and they're 2 complete. You would think it's 2 different salesmen on the phone. One is this good old boy talking about how I took my dogs out to go to the bathroom and man, it was raining and blah, blah, blah. And the other one was with a financial planner, big head guy. And it was, my voice was deepened. I was taking really long pregnant pauses, and I was just nailing him with numbers until he understood that that's kind of where things needed to be. Your person on the other side of the negotiation speaks a language that you need to speak. Okay. So when you speak that language to them, it will do you a better job to get where you want to go. And this is not a manipulation. This is an ultimate show of respect. If that person speaks French, don't get mad that you don't contract the property because you went in there speaking Spanish to them, right? Of course they're not going to sign the paper. You're speaking a different language. It kind of goes back to the love languages, right? If you've got a mate, do they like being touched? Do they like getting gifts? Do they like being told they're amazing? You need to tell them or touch them or gift them in the way that they want to receive. So you have to understand that. Similarly, you have to understand your sellers are in a different place in life than you are. Because I almost guarantee you the people watching this video at noon on a Wednesday are not in a situation where you're facing foreclosure or you're selling your house for 60 cents on the dollar. You have to understand that they're going to think about the world differently than you do. Similarly, your buyers are in a different life position than you are. You have to understand that they're going to think about the world and treat the world differently than you do. So you have to become a student of your seller and a student of your buyer. And one of the gravest mistakes that you can make is to assume that everybody thinks about things like you do, because they don't. And you have to think about it like your seller, and you have to think about it like your buyer, or else you will not be able to communicate with them. Long story long, our buyers typically stay in our properties. The type of person that buys an owner-financed property typically stays in the owner-financed property. That could be over a period of 30 years or whatever, but I usually say you can pretty much account for 15, 20 years average. You're going to have people that refinance. You're going to have people that sell. You're going to have people that get foreclosed on, but we lose less than 6% a year to all of the payoff events combined: foreclosure, refinance, selling, anything you can think of that's a payoff event. And that's in the hottest markets when equity is huge and people are most encouraged to do that kind of thing, right? Our foreclosure rate's under 1%. And then in the lower markets, it's just not as enticing to do those refinances or anything like that. And the type of person that gets an owner financed property from you in the first place typically needs an owner financed property. So they kind of stick in it. So it's a really good question, right? We got some good feedback. Teresa and Matt both say that they love the chart. I'm glad to hear that you guys love that. Augie Herrera says good stuff as well. And Chris also pointing out that you can wholesale your sub-2 properties. I like that as well. And then the other thing that Chris pointed out that I really like is a phrase that I've enjoyed over the years as well, which is either their price on your terms or their terms on your price. That's a good one. So I think that we've gone through a pretty good amount here. We do have a couple other questions out here, but they're a little bit off topic. So I really wanted to nail home today the whole topic of, look, if you have looked at wholesaling and you thought that you were restricted to being a wholesaler, you're not. And I want you guys to know that the world is your oyster. And at the end of the day, you can have it all. You can have this situation where you're getting high returns on low capital and low risk. And even though that does also describe wholesaling, the little caveat off to the side is one is a job and one is investing. One lets you take a vacation my business partner moved to Europe a week or two ago for 6 months because he could, right? Because we have real, true freedom in this model. And that's what I want you guys to have. And that's what Alexandra has so wisely chosen to go her route as well. So I guess to kind of land the plane as we come out, Alexandra, do you have anything that you wanted to point out, an observation of what we talked about today, or even your own experience of what made you decide to go down the owner financing route? What made you decide to become an executive member and that kind of stuff to tackle this as somebody who is so well educated and has such a big background in business and numbers and that kind of stuff? I mean, I think that might be also a good input as we kind of land on the way out.
Yeah, I know this is super biased of me to say because I'm already in the creative executive group, but to be honest, you are really not going to be able to find this level of support and knowledge anywhere else. And, Grant knows this when we talked about this morning. I looked a lot of places. I've been asking a lot of questions other places too. And yeah, you might be getting a lot of information, but just the community that you're getting here at CCF is something that you're really not going to be able to find anywhere else. Like this group is just like CCF mentors in general is just a group of people who realize that, they don't want to do everything like everybody else. And so just by you watching this video here, you're already like 99% ahead of the curve. So yeah, like good on you guys for taking the time on a Wednesday morning to learn from Grant. And I just want to point out on the little cheat sheet that you have, that little sure you can. That's a little creative executive inside joke. If you could join, then you'll kind of find out what that means.
That's awesome. Yep, very true, man. Sometimes you got to have it all. So, guys, thank you for being here. Thank you for participating. I know it was a little bit of a different approach today. And Alexandra, I cannot thank you enough for coming on last minute. I mean, this girl got ready in like stinking 20 minutes to get on and hop onto a stream that she had no idea what we were talking about today. And I just really, really appreciate that from you, Alexandra. So thank you for joining us. We really appreciate your input. Guys, if you watching this or enjoying this as well, you enjoyed the input, give us your feedback, give us comments, give it a like, give it a thumbs up, a share, all that kind of stuff. When we come back in a week, what we're going to be doing is I'm going to actually be showing you one of the areas, like we got a mention earlier from somebody on here, and I don't remember exactly who it was, who was talking about wholesaling sub-2 properties. I'm going to show you a real life example of where I I owner financed. Instead of wholesaling sub-2, I don't want to wholesale sub-2. I don't want to acquire with owner financing and dispo with a cash today. That's a complete that's super misguided, right? Like if you have the ability to create a portfolio out of this and you say, nah, I don't want a portfolio. It's great that this could give me passive income. I'd rather have the thing that I could have done without getting somebody to hold their loan in their name. I'm going to wholesale this, right? Like we don't want to exit wholesale and acquire sub-2, but we can acquire cash and exit owner financed, and we can acquire cash and exit owner financed to a wholesale buyer. And this is why it's so important for us to be able to understand the value of truly knowing the ins and outs of each strategy so that we can mix and match them together. And that's going to be the deal analysis that we run over next time. So again, Alexandra, you're amazing. Thank you so much for hopping in last minute for us. I really appreciate you being here. That's just awesome of you. Anything else that you wanted to say before I take us out?
No, this was a lot of fun, guys. And like next week's episode, like Grant said, is going to be awesome too. So hopefully we'll see you in the next episode.
Excellent. If you like how I teach, if you like, you want to be involved in a community of high level folks like Alexandra is, look at the Creative Cashflow Academy, CreativeCashFlow.com/memberships. You can see all the different levels. Alexandra is an executive member. There's the accelerators and there's the seller financing essentials, right? And we'll even get you in right now. I'm trying to help people out with with COVID being crazy, now's a good time to be watching videos at home. So if your budget's a little bit more strapped, you can put COVID50 and the discount code for your seller financing essentials and knock 50% off, right? Get you in for a cheaper price so that you can get in, get the Q&As, get started with that kind of stuff. And then if you're really looking for kind of the business in a box, you want to get everything handed to you and be around some truly high ceiling individuals, check out the accelerators or the executives group. It is a phenomenal group of people. I was telling my dad yesterday, I'm like, dude, I'm lucky to be in the group. I'm just pleased that I get to, like, of all things, like I'm lucky to be in it. I just happen to also run it, right? Like, we've got some really cool people in there. So this is a really good topic. I hope that it's sitting well for you, and I hope that it's opening y'all's minds. If you have thought previously that you had to do the wholesaling and kind of be in and out and get into that job mentality, you don't, because I didn't. And I'm here to show you from example and history and experience how to do it. And I hope that we can help you get there. So thank you for watching today, and we will see you next time. See you later.